Hello traders, Jason here with SwingHigh.com. It is Wednesday, December 2nd, 2009. The markets closed about 10 minutes ago. This is your post-market analysis. Well, here I sit a little frustrated, not for any trading reasons, but because I just made your post-market analysis and then accidentally deleted it. So, I'll get a second try at it today. Basically what we saw today in the markets was a reaction to mixed economic data, and well, the S&P and the Dow punched out new highs for 2009, which is good to see. Remember, I'm not a bear. I don't only want stocks to go down. I just thought that they should go down for a little while there, but I like to see movement. So seeing the S&P and Dow punch out new highs was nice. Well, what we had, let's take a look at this technically. The S&P basically shattered the previous highs, which should have been resistance, didn't really act as resistance on the way up. Made a tweezer's top, came back down, and then the previous highs, the 111.70 mark, acted as support on the way back down. So we made this nice pullback, which if we bounced off of this line would have been a nice bull pullback, but instead we broke down through that line, had a triangle type formation here. See that? We had a triangle type formation and broke down out of that triangle. When I made the halftime report, I was talking about how we were testing this 111 mark as support, and what did we do? We tested it, came back up, tested it, and then rose slowly off of that support line. Came back to test it again, but also stayed above it. One thing I want to look at here, the apex of this triangle did sort of act as resistance the rest of the day. A lot of times you'll see when you have a triangle, the apex will act as support or resistance line going forward. So it did sort of act as resistance. It wasn't too strong today. Wasn't too big of a triangle, to be honest. Not that significant. Okay, let's take a look. The volume was sort of light today. Do sort of have a doji. Couple things to take note of. So while the S&P and Dow punched out new highs, the NASDAQ, financials, and Russells did not. Those are normally leading indexes, so do take note of that. Let's take a quick run around the markets before I talk any further about that. SPY down 0.04%, the diamonds down 0.14%, the NASDAQ down 0.14%, or up 0.14%, excuse me, the financials down 0.07%, and the Russells up 1.2%. Big move up in the Russells. The VIX dropped 3.65%. The tick was bullish most of the day, spending most of the day above zero, and the trend was bearish, being above 1.2. So the tick, or the VIX and the trend, won out in the battle between the tick, trend, and the VIX. So we did finish the day sort of bearish. More bearish than we started the day for sure. Let's take a quick look at the dollar, up 0.36% today, and gold up 1.5%, which is strange to see the dollar and gold move up at the same time while stocks moved up earlier, but that's what happened. I want to take a look at not gold, but the S&P. What we have on the S&P weekly chart, I'm going to draw a quick Fibonacci and then we'll be done. Okay, from the October 2007 highs down to the March 2009 lows, I drew a Fibonacci retracement because we did retrace, and we are finding significant resistance at the 1122 mark on SPX, naturally, because that is the 50% retracement line. So we lost momentum as we got close to it, and now we're finding resistance here. I'll talk more about that in my post, so please read that. Thanks for being a part of SwingHigh.com. I'll talk to you later.